Welcome to the Moneymakers podcast, brought to you by Sophia. Sophia is an exciting education platform for women with a goal to increase diversity and inclusion in early stage investing. This podcast is a finance, innovation, and investing show for amazing women everywhere of all ages. Each fortnight, we will feature an inspiring woman from the investing and finance sector, or a female founder with a special focus on Asia. To receive a 10% discount on all of our courses, go to sophiawomen.com and use promo code podcast10.
Hi, I'm Christine Yu, co-founder of Sophia. I'm guest hosting today for the Moneymakers by Sophia. Given the volatility of the markets of late, I thought it was important to talk to our next guest, Jessica Cutrera, president at Leo Wealth, about investing in volatile markets. Hi, Jessica. Welcome to the show. It's great to have you here with us. So if I could ask, could you please introduce yourself and tell us what you do, other than, of course, being one of our Sophia experts on our latest course, Introduction to Investing?
Yeah, thank you. My name is Jessica Cutrera, and as you said, I'm the president of Leo Wealth, and our work is serving clients as a comprehensive global wealth management firm. So we provide services around investments and asset management, but also a variety of planning issues, cross-border tax planning, estate planning, personal financial planning. And we encompass that into an offering that really serves global citizens. So people who touch more than one place. We have 55 members of our team, and we have offices in Asia and the United States.
Fantastic. So let's move on to talking about the markets, and let's set the stage. Markets are down. Inflation is at an all-time high. We're in a rates hiking cycle, which has real life implications for us all. Equities are down. Bonds are down. Let's not even talk about crypto. How should we be thinking about investing in this environment when it feels like no asset class is really performing?
You know, one of the biggest mistakes I see people make in a volatile market is being reactive. So there is a natural instinct to want to do something. There's so much going on around us in the investment climate. You're potentially looking at meaningful long-term depressed markets related to inflation. You see equity market pressures, bonds are down. We still have a war in Ukraine. We have supply chain issues. We're still not fully out of the woods on COVID. There is a lot to see and talk about. But being reactive in your planning rarely brings good results. So when we think about what people should be doing in this climate, it's really taking a step back and going back to the core of their planning. Why did you make the investment decisions that you did now? How did you build the financial plan that you have? In many cases, in a volatile market, the best thing to do is nothing. Being reactive, trying to make changes just because the market's changing often delivers poor results.
I like that. Go back to basics, go back to your core and start from there. That's fantastic. Let's talk about cash, Jessica. Ray Dalio, the founder of Bridgewater, has famously said that cash is trash. And, of course, this is mainly due to the soaring inflation, which erodes the purchasing power of cash. So what are you telling your clients about what to do with cash in their portfolio? Should we keep cash as dry powder to invest opportunistically in this environment? Can cash be queen, as it were?
So look, I'd answer that in two parts. The first piece is really thinking about cash as an asset class. And like every other asset class, it has a place in a portfolio. So I encourage investors to think about cash as a tool. So what does cash do well? Cash holds its value. It does not move up and down. It preserves your ability to purchase things in the very short term. So if you need to buy a house 3 months from now, cash is likely the right and potentially only asset class that you should be considering for that goal. However, if you're talking about funding retirement, cash is a terrible tool. It's not going to beat inflation. It's not going to see compounded growth. It is not going to help you reach those longer term goals. So really making investment decisions as I tend to say over and over again, goes back to your plan. It goes back to your planning. Cash is a fantastic tool, and we know the advantage of cash, you know exactly what it does. Equities, bonds, crypto can behave in a lot of different ways. Cash, we know exactly what it's going to do. We know exactly what it can accomplish for us in the short term. And so looking out, is there a need for cash in your life? At a minimum, you probably need an emergency reserve fund, and you probably have some form of short-term goals, things that you need to fund in the next 12 months, potentially the next 24 months. And so you should make decisions about how to allocate cash based on those needs. If you have long-term goals, then allocating for growth is critical. The concept of dry powder is useful in the middle of a market crisis. Sometimes it does make sense to allocate further, to be opportunistic, but it rarely makes sense to think about keeping dry powder because we never know when that next market cycle shift is going to be. Where we are right now is not where we expected to be 6 months ago. But I've met people who've had dry powder for years and they're still not investing because they're convinced it's going to fall further. The reality is when you look at studies over and over of academic research around what makes people successful in their investment experience, it is time in the market. It is not timing the market. You can look at all sorts of analysis around if you invested in the worst day of the year, right? The highest price in that year, and you invested over a long period of time. You are still far better off in most cases than people who've attempted to market time, getting in and out of the market based on that market volatility. So ultimately, again, it goes back to your plan. Is cash the right tool for certain goals? It is. Is it going to help you with some of those more important longer-term goals? It's not.
I love that. And that really puts it into perspective for us. And, when we think about, even Warren Buffett, right? He's had dry powder, for years. And he's only recently started deploying, right? So I think you're right. It's really about the goals and what we want to achieve with cash. So thanks for that.
The Moneymakers podcast is brought to you by Sophia, the place for women to learn, invest, and change the world. Sophia is an education platform for women, providing much-needed courses on personal finance and investing, with a goal to increase diversity and inclusion in early-stage investing. Go to sophiawomen.com and use promo code podcast10 to receive a 10% discount on all of our courses.
So as a woman new to investing, let's say she's taken our Sophia Introduction to Investing course. She wants to get it started investing. She opens her brokerage account and sees all these news headlines. She's perplexed. What can she be investing in this investment climate? What can a new investor do in a volatile investment climate?
Pension funds invest. If you look at how many sophisticated investors plan for their own retirement, a large part of what they are doing is a high quality, highly diversified portfolio. That can make sense regardless of whether markets are up or down, where we're at in the market cycle. If you were owning a high quality mix of large companies across diversified sectors, stock exchanges, you can have confidence that in a long term, that portfolio is going to serve you well. Where people often go wrong is when they open that brokerage statement, they read those headlines, they start chasing the market. So they read the headline, okay, crypto and Bitcoin is down 70%, right? Does that mean they should go buy a bunch of it? Or tech stocks have done this, or bond markets have done that. Trying to be reactive to small slices of the market is not a reliable way to get good results. It's confusing. It's likely only going to increase your stress. I would also say that if you wake up one morning and you feel terrible, right? You're sick, you have a whole weird slew of symptoms. You probably don't, hopefully, start combing the internet, going to the library, getting medical journals. Hopefully you make a doctor's appointment, right? Hopefully you go see people who have spent years.
Or you take an aspirin, right? You take an aspirin,
right.
You rest.
So if you are confused, you are new, you're not sure how to interpret what's going on in the markets, go talk to a financial advisor, right? Find someone who is a fee-only fiduciary, who doesn't have a product to sell you, but who can help give you some context and can maybe help you translate what's going on in the world back into your goals.
And just for, our listeners, what is a fee-only fiduciary?
So a fee-only fiduciary is someone whose compensation is not based on the products they distribute. So if you go to, you walk into your bank branch and they'll notice you've got some cash on hand, or you tell them you have some cash on hand, they're going to look at that cash. They're going to look at their menu of funds. They're probably going to offer you some different products, and they probably get paid a percentage commission for every dollar they put into those funds. But that means they're not showing you funds that don't pay commissions, right? There's a limited offering range, and they're focused on what particular products and solutions they have available to sell. So a fee-based fiduciary is someone who is giving you advice on a total portfolio. And it doesn't mean that some fee-based fiduciaries don't also have funds, or they have investment portfolios and solutions, but they're not being paid based on the product. So they're ultimately being paid to either to manage assets or to provide advice. So ultimately, you want someone who is on the same side of the table as you, rather than someone who's incentivized to sell something to you and then move on to sell to the next person.
Right. So let's take the opposite view. Let's just say, a woman is new to investing. She doesn't quite want to go to a financial advisor yet. She wants to try her hand at this. What is the most common sense way to do this yourself without making too many mistakes?
One of the things that's changed dramatically since the time I started doing this is that there is a wealth of high quality online materials. There are a lot of good ways to do this yourself. The piece I would say, if you're doing it yourself, it is really important to know your own limitations.
Yes.
Should you be trying to pick single name stocks in emerging markets? Probably not. You probably don't have the skill set for that.
No.
Can you build a diversified asset allocation using some low-cost exchange-traded funds based on information you can get online at a major industry provider like a Vanguard or a BlackRock? Absolutely. You can build a good solution, but it's important to understand the limitations of your own time, energy, knowledge, and ultimately, again, look at the resources that you're using. But and there are a number of good books in the subject too. If you really want to do it yourself, there are a lot of tools you can use these days.
Yes, 100%. And I think that, the way I think about this is whether you are working with a financial advisor or doing it yourself, it means that you still have to be very engaged in your portfolio. You have to, there's a certain amount of commitment that you have to say, I'm committing to learning about this. And I should have the basics of and understand what's going on in the markets and the basics of, what's going on in each asset class and how they kind of behave together. And I think that, there are a lot of great resources, and certainly that's exactly kind of what our mission is to really kind of provide that, that great resource, especially for women looking to start their finance and investing journey. So now, we've talked about a few things. We've talked about going back to basics. We've talked about, coming up with your core plan, not being reactive, doing some online research into, and investing for the long term. Let's close it out with investing principles. So we love, investing principles here at Sophia. What are some of your favorite ones to live by, and why? And, any kind of final words for our listeners to live by?
One I'll give you is to pay yourself first. It's probably a little self-explanatory, but it is very easy in a city like Hong Kong, where living costs are high, to ultimately not have much left at the end of the month. So if you are just getting started investing, for that long-term compounding benefit, it is critical that you make a commitment to setting money aside, whether it's every month, every quarter, however you think about your planning, but that you are focusing and investing in your own future. I think that's probably number one. Number two, I would say, is really sticking with your plan. There can be reasons your plan changes, your life changes, but that isn't usually driven by what's going on around you. If you've invested, as you've said, in educating yourself and building out a comprehensive plan that meets your needs, don't let short-term market movements derail you from your plan. And the third piece I would say really is get the support and education you need, whether that's professional advice, whether that's, I think, one of the great things about Sophia is both there's an education piece, but what is exciting to see is the community that is also being built for female investors, and having friends, a peer group who both are going to help hold you accountable for that first goal of saving money,
Yes.
But also who can bounce ideas off you, who can talk about your planning and talk about your life as it changes, and can also support you in having the discipline to stick with that plan.
Exactly. I love all those things. So, Jessica, thank you so much for sharing your wisdom and your knowledge with us. And I can't wait for our listeners to catch you on our Sophia Introduction to Investing course. Jessica is doing our asset allocation module in the course. So, Jessica, thanks again for being with us today.
Thank you.
Thank you.
We hope you have enjoyed this episode of the Money Makers podcast, brought to you by Sophia, the education platform for women that increases diversity in early stage investing. Visit sophiawomen.com and use promo code podcast10 to receive a 10% discount on all our courses. Learn, invest, and change the world.